Welcome to Bloomberg BusinessWeek. I'm Carol Massar.
And I'm Jason Kelly. We're here inside Bloomberg headquarters in New York.
It's a huge week for deals. Charles Schwab to buy TD Ameritrade, LVMH's Tiffany takeover, and still looming out there, Walgreens may get scooped up in the largest private equity deal, at least according to those in the know. Bloomberg broke that story, and we break down KKR's possible $70 billion leverage buyout.
Plus stocks, bonds, and a bit of basketball. Wall Street, it's looking at sports betting.
And then we've got Amtrak's turnaround plan. Hold on, you might not like it.
And here's Joel Weber on the issue. Let's start talking about trains. It's a big travel week. Obviously, maybe people taking a train, flying, but Amtrak, it's in a bit of a pickle.
Yeah, so Amtrak's been a money loser for years, right? And it has a new CEO who came from the airline industry, and Devin Leonard sat down with him to talk about his plan, which a lot of people who are, the Amtrak fans don't really like this plan of his.
Well,
but it could get the Amtrak to be profitable.
Delays. You're never on time, right?
Well, and I love this story. It's Richard Anderson. He's the former CEO of Delta, not making a lot of friends out there. Maybe some folks making friends or at least feeling better about the economy is almost everyone. Peter Coy in the magazine this week talks about this 180 that folks have done looking at the economy here in the United States.
Yeah, just a couple months ago, it was like rain clouds out. It's summer, but rain clouds. Now it's winter, and it's sort of like suddenly the sky seems to be opening up, and everybody's like, oh, this isn't looking so bad. Crazy times in the economy. In the background of all this, of course, remains the trade war, which if there's any sort of resolution, even a phase one deal, you have to kind of think that markets might pop on that.
Talking about crazy times, big technology, your cover story, taking a look at what Google is up to. I mean, there was a time, I love the line in the story about Silicon Valley kind of wore as, a badge of honor that Washington didn't like them. Now they want all in when it comes to Washington business.
Yeah, so this really shows the conflicted nature of being a tech company that, Google now, has reached sort of mid-age, right? Billions of dollars, trillions of dollars out there, and yet there's this other pool of money that they have been unsuccessful in reaching so far, which are government contracts to do Department of Defense work. This is true throughout tech. The Jedi contract that we saw turn into a bidding fight and now a legal dispute with Microsoft and Amazon and the government is one version of it. Google's interesting, and this is why we made it the cover story, because of the number of activists at the company who say, we don't want Google to be doing this kind of work.
The internal strife.
That's right, the internal tension at a tech company. And it's basically broken out into the open at Google, and that's what makes that story so sensational.
Well, and incredibly timely. I mean, there were people fired just this week, essentially over their activism there at the company, and you do wonder, Google's such a harbinger for the rest of Silicon Valley, whether this portends more distress and stress across the economy.
And that's right. The bigger story here, though, is how is tech and Department of Defense going to work together?
Yeah.
And for the industry, for Silicon Valley, they look at this. We have, old companies, defense companies, that don't do tech as well as our tech companies. Can the Department of Defense benefit from tech, but at what cost, right? And that's really the ethical and moral dilemma here. And there's big contracts at stake here.
The world just gets more and more complicated in the relationships, right? A little tricky.
We count on Joel Weber to break it all
do.
down. Joel Weber, editor of Bloomberg BusinessWeek. Thank you so much. And it's not just an internal dilemma at Google, Carol.
That's right, as we just heard. For more on that cover story and big tech competing for business with the military, here's reporter Joshua Brewsty.
There's, I think, two differences between Google and Microsoft. I think the first is an internal difference, which is that Google has always had this culture where they kind of debate everything. There's a long history of these message boards where like everything came up for kind of rigorous debate. Right. Microsoft, a very buttoned up company, it's top down. And then the second thing, to allude to your point about sort of the way the public looks at them, Microsoft has kind of receded as a real consumer-facing company. Most of its business has been in enterprise computing lately. Yeah. Google is like one of the things we think about as the internet. So when people, people use Google search every day, and then they think, wait, they're building weapons or they're hearing, they're building military something, and that makes people uneasy in a way it doesn't maybe with companies that are not in their day-to-day consciousness.
Amazon and its lobbying and, trying to find its way in a much more complicated nation's capital in a lot of ways, and a nation's capital filled with lawmakers, regulators, and politicians who are a little more skeptical about tech than they were 10 years ago. So how does that play into the decision-making at Google when you have antitrust investigations and this sort of skepticism and, dare I say, techlash?
Yeah, absolutely. And you mentioned it, Amazon is also in a very difficult, although I think different situation. For Google, what happened was it publicly rejected the military. I don't think that was its intention. It certainly wasn't its leadership's intention, but it did it.
Yeah.
And Google has a lot of enemies on the right who saw this as an opportunity to attack the company as being unpatriotic, especially because it does some work in China. I think there was some genuine confusion and outrage within the Pentagon. You saw senior military officials criticizing a commercial company, which is not usual. And Google has basically spent the last year backpedaling, trying to reassure the government and the military specifically that, hey, no, we're good actors here, we're willing to work with you. I get the feeling that within the Pentagon that has been working.
Interesting.
But within the political class, not as much.
But it's interesting you say, Joshua, that they're backpedaling, but they're also courting big time, right? The U.S. government and the Defense Department.
Oh yeah, I think
Google wants in.
Yeah, the format of backpedaling is to say, oh, we're backpedaling, we'll take your contracts, which is what they want anyway. So it is kind of a self-serving backpedal, if you will.
And so what do you make of the current state of the internal debate at Google? You talk to a lot of people there. As you say, the message board's still pretty lively. There has been some action taken against employees around media leaks and other elements here. It still feels unsettled when it comes to the internal politics of the company.
It's definitely unsettled. Google has been in a very contentious relationship with some faction of its workforce. You've seen action taken against internal activists, mostly for doing things like accessing information that company's leadership said was confidential. And you see the company really not wanting to back down like it did with Maven. And at the same time, you see people within the company who want to shape its future, trying to extend beyond military contracting into things like border contracts, even into things like dealing with the oil and gas industry. So there is a real tension going on there where both sides are trying to kind of claim as much ground as they can in their own internal debate.
Coming up, we'll look at a fascinating plan to counter social media misinformation and move the Democrats into the 21st century.
Plus, 3 months ago, the economic outlook seemed pretty dark, but now the bulls are back. What happened? This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Carol Massar.
And I'm Jason Kelly. Join us for Bloomberg BusinessWeek every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by checking out our podcast. You can get that at Bloomberg.com or wherever you get your podcasts.
And of course, you can find us online at businessweek.com and on our mobile app. Now to a story you can find online this week. It's about a media startup's digital spin on local news.
Here's the author of that piece, BusinessWeek's Josh Green from Washington. Well, this is a spin on something we've seen really come to the fore in elections over the past few years. Josh, tell us what's going on the left.
Well, this is a very of-the-moment piece in the sense that as Democrats collectively are looking ahead to 2020, one of the things that digitally inclined Democrats, especially the younger strategists, are looking at and worrying about is the fact that Republicans and Trump are absolutely dominating social media, Facebook, Google, all these sorts of things, while Democrats are busy running for president. And so I think I do a profile online in BusinessWeek of the person I think is the most interesting Democratic strategist right now on their side, a young woman named Tara McGowan, who is the founder of a nonprofit called Acronym, that in order to combat this Trump Republican advantage online is started a company that is launching a series of digital newspapers in swing states that are aimed at reaching and persuading the kinds of voters that Democrats think they're going to need to win over in order to prevail in 2020, not just in the presidential election, but in Congress, in state houses, and so on. So I take a look at her team, and at her strategy.
Well, Josh, it is a fascinating story, and we are definitely living in a different world when it comes to news, digital news, and the impact that it's certainly having on elections. How does it work? How does she kind of recreate that local newspaper that has gone away in droves over the last decade?
Well, so McGowan, after 2016, did a kind of deep dive look at why Democrats had lost. And her conclusion was that they had essentially ceded the political battlefield on Facebook, the messaging wars. There were so many people are getting their news and information. And the twist that she had was that one reason why this was happening was because of the disappearance of local newspapers. In the past, people had a source of objective, fair mainstream news, but as these papers disappeared, they were turning to Facebook, where they were being inundated with conservative propaganda, and that was affecting their votes. So she thought that the way to balance this out was to basically begin to publish, to fill that news void, the news desert, and build products to reach these voters, give them a source of what McGowan says is fact-based information. She's adamant that this isn't, bogus rumors and lies and spin, but the same sort of thing that you ordinarily find in a typical local newspaper, and essentially arm readers with these facts in hopes of steering them back toward Democratic issues, the Democratic Party, and the Democratic candidates in enough numbers to have a meaningful effect on the outcome of the race. And the fact that she's doing it in the digital realm rather than the old-fashioned way of Democrats bombarding you with TV ads, in the weeks before an election, is an interesting look at kind of the cutting edge of what is happening in politics as we head into 2020.
Well, Josh, you mentioned objective journalism. This is not objective at the end of the day. This is really meant to, as you say, steer people in a certain direction, to frame issues in a very specific way.
Yeah, this actually touches on two hot button issues that the piece has generated a lot of feedback on both sides. On the one hand, it's about journalism. On the other hand, it's about partisan politics. McGowan isn't out here running this news operation, which is called Courier Newsroom, strictly because she's worried about the death of local news. She's started these newspapers in states like Arizona, Virginia, soon Wisconsin, Pennsylvania, North Carolina. These are all swing states that are going to be important. So clearly there is a political intent here. The differentiation that McGowan makes between what she's trying to do and some of the more extreme conservative sites you see online is that essentially she is hiring actual newspaper reporters, actual editors with journalistic experience to publish a simulacrum of what local news used to look like when it was still around.
Josh Green in D.C., thank you so much for that very timely story. Check that out online.
It's a must read. And markets, by the way, hitting record highs this week. And a story in the economics section looks at what a difference 3 months make.
A real U-turn for the U.S. economy during that time period. Here's economics editor Peter Coy.
There are some changes since August. I picked out one day in August when the Dow Jones Industrials and the S&P 500 both fell like 3% in one session, and the 30-year Treasury bond hit a record low. It was like recession talk was in the air on our TV, everywhere. So what's happened since then? Well, one thing is that the Fed had already changed its stance. Even at that time in August, they'd already put through one rate cut. They've done two since then. And that's huge. The most powerful central bank in the world. The European Central Bank resumed buying securities to drive down the long end of their yield curve. We see the Bank of Japan maybe not as aggressive, but keeping their policy rate in negative territory. So I would say monetary policy is the single biggest change since then. And then you can fill in a lot of things around that. But if it hadn't been for that, we'd probably still be in a world of hurt.
Well, I think that's really key, right? Go back almost a year, last December, right? We were talking about the Fed raising rates several times.
That was the plan.
They did raise rates.
The December was the last increase, but Powell was still talking about how, we have more to come in 2019. And December 24th, Christmas Eve, was a massacre in the stock market. It was really bad. If you go back and look at the history of the stock market, then it's like a deep V. And then everybody took off for Christmas, and they came back with bright smiles on their faces. And the day after, stocks shot up because I think something happened around then where the Fed kind of changed its mind a little bit, and that was the beginning of the rally we're in now.
But we have, you talk about recession. We focused a lot on that 2-year and 10-year spread in the Treasury market, where we did see an inversion of the yield curve, and we've seen that in the past.
Right. So the inversion, of course, means that the 10-year yield falls below the 2-year yield, which historically is an indicator a recession is coming, because usually long-term rates are
you're
higher.
paying more. Yeah.
So it didn't last very long, though. It was gone within 2 weeks, and we had a re-steepening of the yield curve, which is a positive sign in ordinary circumstances for the economy. It means that conditions are normal, basically.
Stocks, bonds, and a bit of basketball. Trading firms, they are looking to play ball in sports gambling.
All right, I'm looking forward to that story. Plus, Visa CEO on why the U.S. is lagging on things like tap to pay. This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carol Massar. You can also listen to us on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, and London on DAB Digital and through the Bloomberg Business app. Well, it's not your grandfather's or your father's Wall Street. This week, Charles Schwab agreed to buy TD Ameritrade for about $26 billion. It's a deal that will reshape the brokerage business.
It's a big one. It's definitely a new era, and that's not the only move. TD Ameritrade and some Wall Street firms, well, they are looking into sports gambling as legalization spreads. Let's get more from reporter Annie Massa.
On a couple different fronts, Wall Street firms are dipping a toe in the water of sports betting. And it's an interesting time right now because a federal ban on sports betting was lifted in the U.S. last year. And you're starting to see about 13 states legalizing the practice, with more potentially to come. And you've got a couple of different kinds of firms looking for ways in.
This is so interesting because I think about how many conversations we had with our sports team about this. They were all looking forward, to the ruling and what it meant for online betting firms. But I didn't really think about the potential for Wall Street firms benefiting from it as well. And that's what this is about.
Exactly. There is some overlap for certain types of firms. The most obvious example is that NASDAQ has licensed some of its exchange technology to horse race markets in Hong Kong and Australia and Sweden.
It's a trading platform, right?
Exactly. It's a trading platform. And as they were saying, there's no need to reinvent the wheel when it comes to handling large volumes of transactions on these kinds of markets. And they recently also licensed matching engine technology to a UK-based sports betting platform where you can own stakes in players. So that's one way that a Wall Street firm is getting into this business.
So talk to us about who is the most interested and, from your perspective, most interesting name here.
Well, one really compelling case that we go into in the story is Susquehanna, which has created a sports betting division operating out of Dublin right now. And they're betting on the outcomes of U.S. sports games. But the idea is to kind of almost make two-sided markets on online exchanges that exist in the UK, for example. And it's interesting because there are some parallels there. Just as they operate as a market maker in financial markets, they can do a similar thing in sports betting markets too.
And I think about the potential. I mean, the sports betting market it's a huge one, right? So this is potentially a big revenue stream for some of these financial firms, potentially.
Potentially, it's not as big as other financial markets, which I think will actually limit its growth. Some of the projections are all over the place for how big this could be in the U.S., but we found projections that it could be about $17 billion, which if you think for huge market making or hedge fund firms, that's not gigantic.
So who's likely to get involved? So we're not talking about your big Wall Street firms potentially, right? Who, you mentioned Susquehanna, Who else might get involved?
It seems like a niche opportunity for expert market makers where you could leverage some of your technology in these kinds of places.
And so when you think about this more broadly, this is coming at a time, this is what you look after every day. You're a primary person looking after BlackRock and a number of the big money managers. Folks are looking for different ways to make money right now. We had a conversation just this week on our daily radio show with a longtime Wall Street guy, former broker, who was saying, look, these guys are going to make money somewhere, especially in the age of zero fees.
Yeah, so that's why I think that you're seeing different kinds of firms looking for ways in. While I could never really see in the immediate term, like a BlackRock getting into sports betting, on the brokerage side, there are some interesting opportunities. And both TD Ameritrade and Interactive Brokers have some sports betting related projects in the works.
Staying in the finance section, Visa CEO Al Kelly weighing in on why the U.S. is lagging on tap to pay and the biggest threat to his industry.
Here's our conversation. It's This Issue's BusinessWeek Talks.
The U.S. is lagging because it goes back, you have to go back about 6 or 7 years at least, where the U.S. was much slower to adapt chip in the card.
Right.
And it took so long to adopt chip. At that point in time, people around the rest of the world were moving past actually just dipping the card to actually tapping. And the reality is that the other countries have moved hugely ahead of us. You have countries like Poland and Hungary that are over 90% tap to pay in the face-to-face world. In the U.S., we have a very interesting situation. The vast majority of the businesses are set and plumbed to be able to facilitate tap to pay. It's replacing the hundreds and hundreds of millions of cards. And the banks, rightly so, want to do it on their normal cycle. So by the end of this year, we'll have over 100 million cards in the United States that will be tap to pay enabled, and by the end of next year, it will be over 300 million. So this will take a little time. Right now, tap to pay in the United States is about 2% penetration. I think we'll get to 5 or 6 next year, and then based on our experience around the world, it will really take off.
Does the world eventually become China? We were at conversations, we constantly talk about it, it's in the magazine often, that basically you've got your phone in China and that's all you need. They don't want cash or any other kind of mode of payment. Is that where we move towards?
I don't think fully. You know, the interesting thing about payments, and I've been in and around this industry for 3.5 decades now, it is an extraordinarily local business. It is driven by tradition. It's driven by laws. It's driven by history. So you look at some of the biggest economies in the world, Mexico, Germany, Japan, they're huge cash societies still till this day.
Right.
And they've been slow to adopt, and I think over time that adoption will pick up. But I think there's still, for a long period of time, going to be a place in the world for all kinds of different form factors, with certainly a card and a phone probably continuing to be the predominant one.
What's the biggest existential threat to your company or industry?
Well, I think cybersecurity, is always at the top of my list. The bad guys, unfortunately, have access to the same technology the good guys do. And when we look ahead over the next decade, you're going to have 5G really take off, Internet of Things take off, artificial intelligence and machine language getting to the next level, quantum computing perhaps starting to show up. And all of that technology is going to create enormous opportunity for value to be delivered to consumers, but it's also going to create potential risks to technology-based infrastructure companies like we are.
Coming up, what could be the biggest leverage buyout in history?
Yes, indeed. We break down KKR's potential $70 billion bid to take Walgreens private and why it's starting to feel a lot like 2007.
This is Bloomberg BusinessWeek. Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carol Massar. Still ahead, a new way to run a railroad. Amtrak CEO won't let nostalgia for train travel derail his quest to turn a profit.
Plus, speaking of travel, we go undercover at LAX, and there's a bit of a wild side there.
I love this story. First up, though, what could be the biggest buyout in history?
Bloomberg broke the story that KKR, the very well-known private equity firm, has formally approached drugstore giant Walgreens to take the company private in a, wait for it, $70 billion deal. That's according to people familiar with that potential takeover. But can the private equity giant pull it off? Here's reporter Nabila Ahmed.
Private equity has so much money to put to work. I think it's something like more than $2 trillion now, just in the past couple of years.
Crazy money, yeah.
It's doubled, so much money. So they're looking at increasingly bigger and more complicated deals to sort of have a bit of an edge, looking at industries that they know about, looking at companies they have already worked with. And this is where Stefano Pessina comes in. He is a CEO of Walgreens, and he is an incredible maverick, an incredible deal maker. He started off with one single struggling drug wholesaler in Naples in 1970s. It's a shop that his dad gave him to fix it. And he fixed that business. Then he went on to fix his dad's friends' businesses. Then he expanded to Spain and France and the UK. And now he is leading the biggest drugstore retailer in the world.
How did he get there, though? That's interesting, because you talk about really starting kind of at the ground level here. And how did he get, though, to the point where he was involved with Walgreens and also Boots?
So he sold his UK company to Alliance Boots, and then he did a deal with KKR to take that company private. Eventually, they went on to buy Walgreens here in the US. And they have actually made, over the 9-year association, him and KKR, out of that deal, have made 3 times their money. They started off with $2.1 billion. So
it's gone well.
They made $7 billion for their investors. It's gone really, really well.
And so it's no surprise then that when KKR deal makers are looking around and saying, what's out there to buy? We got this pot of money. What do we know? What might be a little bit undervalued, maybe not distressed quite, but certainly not stressed, exactly. If not distressed, a little bit stressed. And this is a guy we know, right. KKR, well known for sort of cultivating these managers. I guess now that we've dealt with the equity side, let's go to the debt side, because the leverage in a leverage buyout means you got to borrow, in this case, tens and tens of billions of dollars. Is that even possible?
That's the thing. Analysts are saying that you're going to need about $50 billion. 50 of debt for this company. Not for no reason is it the biggest buyout in history, right. Would it be? And there are questions about whether that can actually be raised in the leveraged loan market, which has traditionally been the market where M&A buyouts are funded, because people are starting to kind of push back. In the past few months, you've seen the single B rated, which is where most M&A loans are rated. People are selling those off because people are starting to get a bit worried about riskier assets. Right. And they're gravitating more towards investment grade. So if they were to do this deal, they would have to do some kind of financial engineering, some kind of cool, clever things to make it happen.
Well, and I do wonder, do they have to pull in somebody else to help get that deal done? You know, it was so that maybe pulls in something on the equity side or something. Like, would they need to? Could they pull in another person beyond KKR?
We know that other private equity firms had also looked at Walgreens, so there are probably others out there who could potentially partner with them.
Doesn't mean they would.
Exactly. They're also, we know, have been talking to their LPs, so their fund investors, about going in with them, because pension funds and sovereign wealth funds also have a lot of money to put to work. So there are a lot of people looking at this deal. I think they would need about $30 billion of equity as well as the $50 billion of debt.
Right.
Wow. Yes.
Right. Yeah. So the equity equation, the debt equation are sort of two different things that would obviously have to come together. The stars would really have to align. So looking forward, let's assume this doesn't happen. What has become clear, though, is that people are thinking really big in this market right now. So if maybe there's not a $70, $80 billion deal that's happening, we could go back to an era, as you say, sort of our time machine back to 2007, when we're thinking about again, $25, $30, $40 billion deals. What are you hearing from bankers you're talking to about maybe some new ideas? Are they sort of out there saying, oh, well, I hadn't thought that maybe this was possible, but now we should start doing some pitch books?
Yeah, people are saying that you could easily raise $10, $20 billion in debt. So these are still really big deals.
Right.
And there are so many private equity players looking for assets. There are so many bankers running around sort of pitching different things to them, and they're all doing their own work as well. Private equity is going to be the really big driver of deals in the coming years because of that firepower that they have.
Let's get a little bit more on M&A. Let's bring in Kaylee Lyons with a chart on deal flow because it was a really busy week.
It was a very busy week. Now, granted, it has been elevated in terms of the M&A activity we're seeing for really the better part of this past year. This is the daily M&A transaction by value here in the U.S. You can see we've seen spikes back in January, earlier this summer, and this past week we saw more than $70 billion in deals announced on Monday alone, at least 10 that were worth more than $1 billion. And really the reason why, in part, is the fact that funding is really cheap. We're in a lower rate world, and that means it doesn't cost a lot to borrow. And as we know, that can be a big driver of M&A activity.
Well, the other thing that we understand is a big driver, it's bonus season. So bankers want to get all of that done. And in an economy that seems very friendly for deals. Kaylee Lyons, thank you so much. Well, coming up, riding the rails, but maybe they're not so friendly.
How Amtrak CEO plans to make the system profitable.
You might not love the details.
This is Bloomberg BusinessWeek. Welcome back to Bloomberg BusinessWeek. I'm Carol Massar.
And I'm Jason Kelly. Join us for Bloomberg BusinessWeek every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by checking out our podcast. You can get that at Bloomberg.com or wherever you get your podcasts.
And of course, you can find us online at businessweek.com and on our mobile app. It's been said that if you wanted to design a railroad from scratch, you would never come up with one such as Amtrak. America's passenger rail system, well, it has been a money loser since it began almost a half a century ago. That's a long time.
So many years, so much money lost over that period. Well, now its CEO is promising changes. Here's Devin Leonard with his story and this week's Business Week Explainer.
Critics say this is no way to run a railroad. Amtrak carried 32 million passengers last year and had an adjusted operating loss of $171 million. The most valuable part of the system is the 457 miles of track between Boston and Washington. Last year, Amtrak trains on that route showed a profit of $424 million. But its long-haul routes, like the Crescent from New York to New Orleans, posted an operating loss that more than offset that. The problem? Amtrak doesn't own most of the 21,000 miles of tracks it uses. Freight lines do, so passenger trains often have to pull onto sidings to wait. The result? Lengthy delays. And last year, a 4.5% decline in ridership on those longer routes. CEO Richard Anderson, who used to run Delta Airlines, has been battling the freight railroads and trying to cut costs. Anderson wants to break up Amtrak's longer, money-losing routes. Those would become shorter trips between cities and attract passengers who would otherwise drive or fly. Rail enthusiasts are outraged. Senators in rural states worried that their voters might lose service. But CEO Anderson cut Amtrak's loss by 82% in the most recent fiscal year, so he probably doesn't plan on being derailed.
And for more on whether Amtrak's plan will pay off,
well, you just heard from him. Here's our conversation with Devin Leonard.
His plan is, let's get Amtrak, profitable or at least break even on an operating basis.
And he's gotten it better, right?
Yeah, well, yeah. He's, I guess the adjusted operating loss this year was $30 million. That's way down. Even last year it was $171 million.
Yeah.
So he's on track to break even next year in fiscal 2020. What he wants to do is take the money that they get every year from Congress and use that to fix up the system, which needs a lot of work. They're already getting new trains and doing things like that, but the idea is to show Congress that, look, we can run Amtrak, efficiently and profitably. Excuse me. So now let's do something about addressing the bigger problems. And that includes the Northeast Corridor, which needs $41 billion in sort of infrastructure repairs because the system's crumbling at Penn Station.
$41 billion.
Yeah.
It's kind of interesting, and I do wonder whether or not he can make this work ultimately.
Well, that's the thing. It's the typical problem when you bring in somebody from the business world into a government agency. This is something that's happened at the Postal Service over the years too. But people say this thing needs to be run like a business, and let's get somebody, some successful corporate executive. So they bring them in, but these government agencies are not businesses. There's all sorts of red tape and constraints, and all these different constituencies.
Public, it's weird. No, it is, right?
The government corporation is an oxymoron. Yeah. So the things he could do at Delta. And and despite the fact that they upset people, he could do them. And if he showed that they worked, people ultimately accepted them. But here, it's a much more complicated thing because, as he said, testifying on the Hill to people who were upset with him, senators like, look, you're my boss, know. So, but whatever the term is, having all those bosses, that's not something that a guy like Richard Anderson's used to. So I think he's trying to do his best. We'll see. We'll see if it works. But this is the first time. I think that's the first time Amtrak has had these sort of new ideas and this sort of innovation, ever. Certainly not in decades. And it's a really important system, and it needs to be changed. And it's about time somebody with some fresh ideas was in there.
So let's stay with travel and turn to the pursuit section.
We've got a travel takeover, and for the opener, Brandon Presser goes undercover, works at LAX. It's one of the world's busiest airports. Here's editor Chris Rouser on what he found.
Brandon Presser's specialty for us is he goes behind the scenes and works undercover at all these fabulous fancy places. So he's done it at Nobu, he was a butler at the Plaza, he was a ski instructor at Aspen, and every time we're always surprised that people agree to let him do it.
So LAX and even security are like, yeah, come on in.
Yes, LAX was very excited about this. They offered him access to TSA, to the private suite, the VIP terminal. They offered him access to the mail center, to food service, to the private lounges, like the business class lounges, everything. He went behind the scenes for a week and learned about how it all works.
But let's start with TSA because I definitely learned some things, some slightly horrifying things about what people do. I mean, there's just some scenes in here that are hard to get out of your head. What did he learn?
So basically, people are constantly, sort of accidentally, trying to bring things through TSA that they don't know are contraband. So, people bring a prosciutto or something, or a plant is very common. But all day, every day, there's stuff that's really wild. Including one time that one of the people that he worked with actually encountered a dead body trying to get through security. A family, a father and a family had died, and they were trying to get him back to Mexico to his family for a burial. And instead of shipping a coffin, which is actually expensive, they bought a one-way ticket, and you cannot take a dead body on a plane.
They basically put him in a wheelchair.
Yes,
right?
Full Weekend at Bernie's. Yeah. And they got stopped at security.
Were they Dad sleeping? What were they thinking then?
Exactly, that's what happened. And actually, it's not uncommon. It happens.
Wow.
Yeah.
All right, this one scene.
You can't get. Okay, where are you gonna go? Because there's so many.
The rotted fish.
Oh yes. So there was at one point a woman was going through, and she had strapped to her body rotted fish with all these tsetse larvae on it. And when they sort of opened her clothes and discovered it, the larvae started jumping around, and she actually, I guess it was food, so she actually started grabbing them as they jumped around and eating them.
And putting them in their mouth.
Yes.
Yeah.
I'm sorry if you're listening or watching.
You weren't going to ask that question, so I had to.
Well, I was going to go to the guy who had all the birds on him.
Yes. Well, if you read the New York Post, this is really a thing, actually. There are songbird competitions in New York, in the New York area, actually. And so people have to smuggle in songbirds. So this guy had dozens of songbirds in toilet paper rolls, little rubber bands around their beaks, strapped to his body. Just flying with them.
Yeah.
And underneath, he just wore loose
underneath
clothes.
Normal baggy
just
clothes.
Going through and thinking, hey, no problem.
Yep. And so one time they found a cobra in a Pringles can.
Yeah.
Can you imagine opening up a Pringles can?
That now lives at the San Diego Zoo.
Yeah, now the cobra's at the zoo. Yeah.
Let's talk about lost and found, because I have lost things at airports and found them in many cases. Famously left one of my jackets at Heathrow, and they tracked it down.
Nice.
But What the size and scope of the LAX lost and found operation? Holy smokes,
massive.
it's like Costco.
Yeah, at any given time, they have about 6,000 laptops. And if you've ever left a laptop at TSA, they're actually pretty good about tracking you down and getting it back to you, because it happens all the time. But they have stuff where you're like, how did you even lose that? Like a surfboard or a set of bongo drums or a chainsaw, which you wouldn't have been able to get on a plane. But like, oh, you just left your chainsaw somewhere in the airport.
It is nuts. I mean, they estimate that 70 people a day lose a computer.
Mm-hmm.
That's nuts.
Yeah,
just leaving
it's
it
like
there.
an Apple store in there.
So one of the things he also addresses is, and this is a very Bloomberg thing to do, essentially why things cost so much at the airport. And it's because the infrastructure is really expensive.
You might have noticed that the food is expensive at LAX. There's no McDonald's. It's all these kind of like upscale places, and it's because there's no storage really there, so they have to bring in everything every day. They can't stock. Also, staff has to be really highly paid because it takes an hour for staff to get in and out, just to even get in and out of the airport.
Right.
So they're paying a lot. So there's a huge premium on prices there over like what you would pay on the street. Whereas like at the Portland airport, there's a 0% markup.
Coming up, finding the perfect fit for your sneakers. You got to get down to the molecular level, or at least quarter sizes. We hear from the founders of Atoms.
Plus, Thanksgiving, it is over, and the holiday season, it is in full swing. We sit down with the Radio City Rockettes. This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carol Massar. You can also listen to us on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, in London on DAB Digital and through the Bloomberg Business app.
And that's where you can find extended podcasts.
Like this one. It's a conversation I had with the co-founders of Atoms. They are a couple, a married couple. They're from the same Pakistani village. They've created a shoe startup. It's based in Brooklyn. It's the first to offer sneakers in quarter sizes. So cool.
We were like, hey, can we make a shoe that people would want to wear every day? Not that we want to sell. Can we build a shoe that people would want to wear every day? And that is where this idea of a casual, very, very simple, all the products we wear every single day, they tend to be very simple.
Right.
Still extremely, extremely comfortable. We were going after the best of the best in the industry after Nike and Adidas on comfort. And we only make one shoe, so we put a lot of effort into the precision sizing, the quarter sizing, the comfort of the shoes, the laces, how high or how small something is. Like this midsole, it took us 6 months to work on that to just make it more comfortable than the Adidas Ultra
6
Boost.
months on the midsole.
On the midsole, yeah.
Then we were doing like a lot of things. You don't need to tie your shoelaces. It's so easy to slip on and off. And then there is copper lining in your shoes, so your shoes won't smell. And then the idea of that shoes should be so durable and comfortable. Now, combining all these ideas together, it's not easy to talk about that story. And then on top of that, these shoes comes in quarter sizes.
Right.
And you can have two different shoe sizes. If your right size is 9.25 and your left size is 9, you can have two different sizes and you don't need to pay for two pairs. So we were thinking about like when we are going to talk about these things to our customer, we need to make our shoes so simple that it can carry on throughout the day, as well as they don't like scream, they actually become part of your life.
Right. And so I want to talk to you about the quarter sizing, because it's the sort of thing that when I learned about this with Atoms, it makes so much sense. Why hasn't anybody done that before?
Yeah, I actually have no idea, but I believe like it's very interesting thing. Like one of our very good friend, he was talking about this to us, that when you are actually very close to the picture, it's very hard for you to understand like what are the opportunities. But people like us who are like coming from different backgrounds, when they look at an industry, we actually try to think about that. what our customer want and what we can offer them. So when we were thinking about quarter sizing, the basic idea was how we can make shoes so comfortable. And fit is actually a very important part of your comfort. If your shoes is not perfectly fit to your size, you are not going to feel comfortable.
Right.
So when we were thinking about fit of your shoes or fit for your feet, we were thinking about which one. Because 60% of the people, they have quarter size difference between their right and left. It's a huge population.
Wow. Yeah.
And so that's how we come up with this idea. And I think it's also embedded in our company name. Our company name is Atoms. And the reason we decided to have this company name is because we are willing to go to atomic level to make shoes better.
Right. So why do you think, especially having been in the dress shoe business and now in the sneaker business, why are sneakers having such a moment?
America especially and world in general is becoming more and more passionate because we have so many young people coming into the world these days, and they are not hesitant. They are not hesitant about ideas. They're not hesitant about movement. They're not hesitant about their interest or passion about certain celebrities or icons or whatever we want to call them. So that is what we learned. We actually have a name for our customer called the New Creative. And these are people who are very considerate about what they buy, where they buy it from, what things look like. And every brand like Nike and Adidas, they champion it with sportsmanship. And now we are seeing a lot more entertainment, a lot more lifestyle icons, not only just in sports, but also in fashion, also in tech even. Even tech celebrities are now becoming like Elon Musk is not longer a celebrity just for the tech. He's a celebrity for a lot of people.
And from new kicks to high kicks.
So you did there. On our daily radio show, you can listen to interviews like this one with the Radio City Rockettes.
We are so excited for this season of the Christmas Spectacular. Each year, our creative team tries to reinvent the show in some way to make it more exciting for audiences that come back year after year. This year, if it's possible, we've made the finale even more impressive. The finale number was introduced last year, and then this year we've really focused on the choreography, the dazzling costumes that the Rockettes perform in, and then also the Rockettes have a really impressive entrance to the number. I won't ruin it if you haven't seen the show yet. You'll just have to come and see it, but it is so exciting, and I feel like the Christmas Spectacular is one of those traditions that families can come to year after year. It's a different experience every time you come, if you're sitting even in the same seats.
I mean, this is a quintessentially sort of New York thing.
Totally.
And you guys appear not only in Radio City Music Hall, obviously for this show, but you're at the parade. You guys, I believe, participated in the World Pride events this year. So, I mean, this is something that is very New York. What is it that sort of connects you to New York other than 100 years of history?
Of course, yeah, absolutely. I mean, the Rockettes first started performing at Radio City Music Hall in 1933. We perform in one of the most iconic theaters in Radio City. It's truly an experience from the moment you walk in the door, especially at Christmas. The decorations are drenching the theater. And just from the moment you walk in the door, just the vibe of the theater, you can meet Santa, you can meet a Rockette. We have 2 live organs that are playing pre-show. And I feel like the Rockettes especially are such an iconic staple in New York City. They represent poise, grace, and an athleticism for an all-female dance company.
Right.
And I definitely grew up watching the Rockettes perform, and I was so inspired by these women coming together from all different walks of life. But it's the true epitome of teamwork. What we do on stage is not about one particular dancer. It's about all 36 of us on stage, and I just think that's so incredible to be a part of.
Bloomberg BusinessWeek, it's available on newsstands now.
And also online at businessweek.com and through our mobile app. So what's your must read?
My must read, it's online. It's Josh Green. His story, you and I always talk about, we love his reporting. It's like reading a book because he really digs into a story and brings us someone, an individual in this case, and her work, and about something we didn't know about.
Right.
And this is something that could be very crucial for the next round of elections.
Well, and as he said, it really hits this nexus of both the political and the journalistic.
Exactly.
2 things very interesting for us.
Yeah, absolutely. And your must read.
I love the Amtrak story. Devin Leonard, he always goes deep. Richard Anderson, the new CEO, we knew him from his Delta days. It's a big challenge to a very important American institution.
And I just love that Devin actually got on the trains to help tell the story. It's a good one.
More Bloomberg Television starts right now.